Here's a summary of Vertiv's Q3 2025 earnings call transcript. Q3 2025 performance, highlights and financials. Vertiv delivered a very strong quarter, exceeding guidance across all key metrics. Revenue. Organic sales grew by a significant 28% year-over-year. The Americas region saw exceptional growth of 43%, while APAC contributed 21% growth. EMEA experienced a slight decline of 4%, which was in line with expectations. Profitability. Adjusted diluted EPS surged by 63% year-over-year to $1.24. Adjusted operating profit reached $596 million, up 43% from the previous year and exceeding guidance by $86 million. The adjusted operating margin stood at 22.3%, an improvement of over 200 basis points year-over-year, exceeding guidance by 230 basis points. This was driven by operational leverage, positive price-cost dynamics, and productivity gains, partially offset by tariffs. Order momentum. The company reported a strong 1.4 times book-to-bill ratio in Q3, indicating robust future demand. Trailing 12-month organic orders growth was approximately 21%, with Q3 orders themselves up 60% year-over-year and 20% sequentially. Backlog. Total backlog stands at a healthy $9.5 billion, up 30% year-over-year and 12% sequentially, providing strong visibility into 2026. Free cash flow. Adjusted free cash flow was $462 million, up 38% year-over-year, representing approximately 95% free cash flow conversion. Balance sheet. Net leverage was a strong 0.5 times, with expectations to exit the year at 0.2x. Management's forecasts and future outlook. Vertiv is raising its full-year 2025 guidance across key metrics due to strong momentum. Q4 2025 guidance. Adjusted diluted EPS. $1.26, up 27% year-over-year. Net sales. $2.85 billion. Organic growth of 20%. Adjusted operating profit. $639 million, up 27% year-over-year. Adjusted operating margin. 22.4%. Full year 2025 guidance. Adjusted diluted EPS. Raised to $4.10, 4% higher than 2024. Net sales. Raised to $10.2 billion, 27% organic growth. Adjusted operating profit. Raised to $2.602 billion, up 33% from last year. Full year adjusted operating margin. 20.2%, 80 basis points higher than 2024. Adjusted free cash flow. Raised to $1.5 billion, 95% conversion. 2026 outlook. The company anticipates continued significant organic sales growth in 2026, driven by strong order pipelines and market indicators, though EMEA is expected to rebound in the latter half of the year. Investments in supply chain, services, and capacity are being accelerated. Vertiv remains committed to its long-term margin targets, with incremental margins expected to be in the 30% to 35% range. The 800-volt DC portfolio is slated for release in 2026, aligning with industry advancements. Significant risk factors. Tariffs. Tariffs remain a dynamic challenge. Vertiv expects to materially offset current tariff impacts by the exit of Q1 2026 through mitigation actions and pricing programs, while optimizing its supply chain and manufacturing footprint. New tariffs announced since the last earnings release are impacting Q4 margins. EMEA market. While expected to re-accelerate in the back half of 2026, EMEA sales remain muted due to power availability and regulatory challenges. Restructuring programs are in place to position for future growth. Global landscape. General complexities from geopolitical shifts are acknowledged. supply chain inefficiencies. Although progress is being made, some operational and supply chain challenges were experienced, with some driven by actions taken to mitigate tariffs. Key highlights: exceptional financial performance, exceeded guidance across all metrics in Q3. Strong order momentum, high book-to-bill ratio and substantial order growth signal robust demand. Accelerating AI demand, driven by AI adoption. The market growth is accelerating, and Vertiv is outgrowing the market. Technology leadership, consistent investment in R&D and capacity is strengthening competitive advantage, with a focus on staying ahead of industry trends like AI and higher density data centers. Services as a superpower. The acquisition of Waylay and scaling of services capacity are enhancing predictive analytics, remote monitoring, and customer support, creating a significant competitive moat. Strategic acquisitions and investments. Investments in capacity, technology, including R&D growth and M&A, and services are accelerating to capture opportunities. Strong balance sheet provides significant strategic and capital deployment flexibility. Full-year guidance increase reflects confidence in execution and market dynamics. Lowlights: EMEA performance. Continued decline in EMEA sales, though in line with expectations, indicates ongoing market challenges. Tariff impact. While being mitigated, tariffs continue to present a headwind, impacting Q4 margins. Stock price reaction. Management noted surprise at the stock price reaction despite strong results. Most important statements from management: David M. Coate, Executive Chairman. This is a very strong quarter by any measure. We exceeded guidance across all metrics in a very convincing way. I'm more excited now than ever, and you're seeing why. We're in the early stages of the digital age, and Vertiv's position today reflects the years of focus on customer relationships, disciplined investment, operational excellence, and R&D expansion. I'm more confident than ever that we're in the early stages of what I believe will be a multi-year period of significant growth and value creation. Giordano Albertazzi, Chief Executive Officer. Our Q3 performance demonstrates the strength of our strategy and execution. The market growth ranges from our November 2024 Investor Day remain valid, though tracking at the higher end with the Cola Cloud share expanding as the fastest-growing segment. The overall market growth is accelerating. We continue to outgrow the market through superior technology and execution. Our total backlog now stands at $9.5 billion, up about 30% year-on-year and 12% sequentially. This clearly gives us strong visibility into 2026. Services, combining advanced technology, global reach, and growing capability is truly one of Vertiv's superpowers. We are accelerating our investments for growth along three dimensions: capacity, technology, and M&A. Our 800-volt DC portfolio plan for release in 2026 aligns directly with NVIDIA's 2027 rollout of their Rubin Ultra platforms. We are collaborating closely with NVIDIA to advance these platform designs. David J. Fallon, Chief Financial Officer. Our Q3 adjusted operating profit of $596 million was up 43% from last year, and $86 million higher than guidance. Adjusted operating margin of 22.3% exceeded prior year by more than 200 basis points. Importantly, our year-over-year incremental margin in the third quarter was approximately 30%, a good indication that we continue the path towards the full-year adjusted operating margin target of 25% in 2029. We are raising our projection for adjusted diluted EPS to 4.10. We are raising our expectations for net sales to $10.2 billion, translating into 27% organic growth for the full year. Regarding Q4 guidance reduction, I would say half of that on the contribution margin side, and certainly driven by the incremental tariffs that we saw post-earnings last time. In addition, planning to accelerate fixed cost investment into Q4 that were previously planned in the first half of next year. This summary captures the key financial results, forward-looking statements, and strategic priorities discussed during Vertiv's Q3 2025 earnings call.